All right, it's 9 o'clock. Looks like we've got most everyone in here already, so we'll go ahead and get started. So welcome everyone to the BAR's update for cash basis governments. My name is Kaylee Paggio, and with me today is Christy Cogill and Olivia Crouch. We're all on the local government support team here at the State Auditor's Office, and we're here today to give you all of the exciting updates coming to the BAR's manual. We did send out an email yesterday afternoon with the handout of today's presentation. If you didn't receive it, there should be a panel labeled handouts on your GoToWebinar control panel. So you can download the handout from there. But if you have any trouble getting the handout, please let us know and we can get that emailed out to you. So before we get into the really fun stuff, I just need to go over some webinar housekeeping items really quick. So we always encourage you to ask questions throughout the presentation, and this is a screenshot of where to input those questions. On your GoToWebinar control panel, you should see the header for questions. You can click that icon in the top right corner to open the box to enlarge it so it's easier to see and type out your question. We do have a full agenda for today, so if we aren't able to get to your question during the webinar, we'll definitely reach out afterwards and get you a response. If some questions are more unique or require additional research, we may refer you to the help desk just so that you can get connected with an expert on that specific topic. And then we have 8 polling questions that are going to be displayed randomly throughout the presentation. These are not required and they do not go towards CPE credits. These are just used as a fun way for us to gather information and help keep everyone engaged in this virtual environment. Because we all know virtual training, it's hard to keep people engaged. So this is how we try to achieve that. And with that, let's go ahead and do our first polling question just so you can see how it works. So I've launched that poll. It should be up on your screen. And the question is, how often do you visit the BAR's manual? I know everyone's going to say daily. That's definitely going to be the winner. It doesn't look like it. Results are coming in. All right, just give that another second. And then I'm going to go ahead and close the poll. And what's fun about these is that we can share the results so you can see how majority of everyone voted. So I was wrong. Daily did not win. Quarterly seems to be the most popular response throughout these sessions that we've been having. So that's just how the polling is going to work. And then go ahead and hide that. And now for the CPE information. This webinar is 2 hours and eligible for 2 CPE credits. There's going to be 8 code words displayed throughout the presentation, so 4 per hour. These code words are used to get your CPE credits, and it's up to you to keep track and document the code words in the order that they are presented. So that piece is really important because after the webinar ends, you'll be asked 8 questions regarding the order of the code words, and correct responses are required to get the full CPE credits. If you miss a code word, we unfortunately are not able to provide it to you after it's been displayed. The rules around CPE credits are very strict, so we're just trying to abide by those rules. So we just want to remind everyone to keep track of those code words if you are here for CPE. And then the survey will pop up in a separate window once the webinar has ended. There are 2 survey questions related to the BAR's update. These just ask one thing that went well and maybe one thing that could be improved on for next year. And then after those, you'll be asked the 8 questions related to the code words. And you'll receive the certification of attendance via email within 24 hours. It just gets sent out automatically. And keep that because it'll be used in conjunction with the CPE certificate, and that's going to be sent out by SAO in about 4 to 6 weeks. And then here is a list of our agenda items. We have some great topics to go over with you today, and we've designed this so that the first hour is going to cover all of the general BARS updates. Then we'll take a short 10-minute break, and then the second hour will be dedicated to leases and SPEEDA only. If you've already attended the lease and SPEEDA training or this topic doesn't apply to you, you are able to leave the webinar after the first hour. Just a disclaimer though, that if you do leave early, you'll only be eligible for 1 CPE credit. And we are in the implementation year, so we always encourage everyone to soak up as much training as possible on this topic. There's a lot of great resources out there that we'll be going over. And then we have our first code word, and then I'm going to hand it over to Christy to start us out with our first agenda item. And so that first code word is BARS. So give you a second to jot that down. Just another reminder to keep track of these code words. And the first one is BARS.
Thank you, Kaylee, for doing our intro. Our first topic today is accounting for courts. With the implementation of fiduciary activities, we started working closely with the Administrative Office of the Courts to verify that our court accounting was correct and met their needs. Through this research, we noticed that we were not accounting for a certain type of court, and therefore we couldn't show compliance with state law. Therefore, we are making some changes to our expense side for municipal courts. Currently, municipal courts have one expense code. It is 51250. We will be removing that code as a valid code and adding 2 new codes. The first one is 51251, which is a non-contracted court. This is when a city provides their own court. They have their own court, they have their own expenses. That would fall under the 51251. 51252 is for contracted court. This is if you contract out to another government, so they provide your court services, or you are the one who is providing the court services and have a contract with a city to provide those court services for them. There is a possibility that some of our cities will use both codes. They'll use 51251 for their own court services and 51252 because they are providing services to other cities. This is applicable for fiscal year 2022, reported in May of 2023. Our next topic is fiduciary funds. This is not changing anything. We've just gotten a lot of questions about what is allowable in our fiduciary funds. So we're going to go over all the BARS codes that are allowable in our fiduciary. This time when we're talking about fiduciary, we mean all of the 600 funds. Last couple of years, we've really been concentrating on those custodial funds, but we mean all of them at this time. So the first thing is your beginning and ending cash and investment balance. Under normal circumstances, that's going to be under your 30831 and 50831, which is your restricted cash and investment balance. Fiduciary funds are assumed to be restricted because there is an outside entity directing the use of that money because it is their money. There are some very, very rare circumstances where you may need to report a negative cash and investment balance in your fiduciary funds. In these cases, that negative balance would be in the 30891 and 50891, which is your unassigned cash and investment balance. Courts, like I said, were a big deal with fiduciary activities. If you have a court, you must have a custodial fund for that court. It can be grouped with your other custodial funds, but you must have a custodial fund, and you must use 386-586 if you are remitting to the administrative office of the courts. The administrative office of the courts prescribes additional digits in those 386-586 codes, and that is so they can meet their requirements under state law for the allocation of those fees. So if you have a court and you remit to AOC, which is the administrative office of the courts, you must use the appropriate 386-586 codes. We are also allowed to use our 38810 and our 58810, which is our prior period adjustments due to error in our fiduciary funds. We also have 38850 and 58850. This is changes in accounting principle. This is only used if there is a significant change to the BAR's manual and cash basis accounting that requires you to move funds. For example, fiduciary activities. We had some activities that had previously been reported in our fiduciary funds that under this new standard no longer qualified. And we had to move them over into our general fund or the appropriate fund. That was a change in accounting principle. Nobody made an error, we just changed the rules. So we used the 38850 and the 58850 to make that change. We have 38930 and 58930, which is our custodial type collections and remittances. This is just when you are collecting to send off to another government or entity. Common examples of this are sales tax, the state portion of leasehold tax, or state portion of building fees, building permit fees. That gets remitted to the state. Those go through 38930 and 58930. A code that sounds very, very similar, but has one distinction is 38940 and 58940. These are custodial type deposits and disbursements. This is only when you are the acting treasurer for that fiduciary fund. Two common examples that we see is a government has a fiduciary pension plan. Therefore, it's reported on the C5, but that government is the treasurer of that pension plan. For those transactions, they use the 38940 and the 58940. The other common example is counties acting as treasurer for their special purpose districts. They use the 38940 and 58940 for those transactions. Our last one is the 38960 and the 58960, which is custodial type interest earnings. This is very specific to our fiduciary funds. Please do not search the BAR's manual for interest and use the standard interest earning code. That does not work in our fiduciary funds because that interest has to be accounted for other entities. So use the 38960 or the 58960. We are up to our second polling question, and then Kaylee will take it over for schedule of expenditures of federal awards. Our second polling question is, how often do you download an updated chart of accounts? All right, give it a few more seconds. We are getting the common answer for all of these sessions. Overwhelmingly, most people download the chart of accounts at the beginning of the year or whenever there is a BARS alert. Any changes to the chart of accounts triggers a BARS alert in the middle of the year. We also do a BARS alert when we've made our big update in December. So off to Kaylee to talk about the SPEEDA.
Thank you. All right, so let's talk about just a couple minor changes coming your way related to the Schedule 16, or also referred to as the FIFA. So this might not be news to you, but the term CFDA has gone away and it was replaced with ALN, which stands for Assistance Listing Number. So you'll notice that change throughout the BARS manual and within the annual report. The numbering system hasn't changed. It's just the term CFDA is gone and now we just say ALN instead. And then we have also cleaned up the instructions and programming related to the reporting of the other award ID number on the SPEEDA, just so that they are consistent and clear. Because previously the other award ID field was required for every line item on the SPEEDA. So you had to put at least something in there in order to submit the report. But the other award ID number is actually only required if it's an indirect federal award. If it's a direct award, then you don't need to report the other award ID number. So now you can just leave that field entirely blank, and that is the correct way to report direct awards. Now, I just want to put out a reminder that when reporting direct awards, make sure that the field for pass-through agency name is blank and that there's nothing in there, because that's what will indicate that it's a direct award. Now, for indirect awards, the field for other award ID number is required. And there are some instances where there truly is no other award ID number assigned by the contract or agreement. In those cases, you can put an A for not applicable into that field. Since something is required there in order to submit, you can put an A if you don't have one. And then since we updated the programming to align with this guidance, we have created 2 new validation checks. So you would receive a red flag error message if 1, the other award ID is reported for a direct award, or 2, no other award ID number is reported for an indirect award. And let's take a look at an example just to kind of visualize what all of this means. The top image is just a screenshot of what the manual data input looks like within the filing system. Nothing has changed here except for if you leave the field for pass-through agency name blank, indicating it's a direct award, the other award ID field just gets grayed out, so it doesn't allow you to input anything, and it helps minimize the chance of getting one of those red flags. Then the second image is a screenshot of the FIFA template. So with this, I just wanted to show what it would look like if it's correct, or what it would look like and what would result in one of those red flags. So you can see row 2 highlighted green. This one is good. You can see that it's an indirect award because there is a pass-through agency name. And then we have also reported the other award ID number. So that one is good to go. Now below that, you can see 2 lines highlighted red, and that would indicate that these would result in a red flag. Because the first one, we have a pass-through agency name indicating it's an indirect award, but there's no other award ID reported, so this one would get a red flag for that. And if there really is no other award ID, you would at least have to put an A for this example. And then that last one, you can see that there's no pass-through agency, indicating it's direct, but there is a other award ID reported, which would not be accurate. So that field should be left completely blank. And that's all we have for updates to the SPEEDA, so nothing too crazy. And now we're going to get into some of the other annual report updates and reminders. And of course, I have to put out a reminder of the deadline. The 2022 annual report is due by Tuesday, May 30th. So get started early and allow plenty of time for questions. And then one exciting update that we get to share with you is the Schedule 19 is being removed for your 2022 reports. So no more having to select not applicable or trying to select no activity and it doesn't let you. So now this question is going away and it's one less thing you have to do. So I'm really excited about it because we always get tons of questions, like, what do I put for this? It doesn't apply. So I am excited that it is going away and it's one less thing for you all. And then that brings us to our second code word, which is leases. So our second code word is leases. Give you a second to jot that down, because remember, gotta keep track of these code words if you want CPE. So second code word is leases. All right, now this update is related to the Schedule 20, which is only applicable for rural counties. This update was requested by the legislature to improve and streamline how we are collecting this data. Really, the only change is that we're converting the template from a Word document into Excel, and it's actually going to be uploaded into the filing system, really similar to the other schedules that you probably file, like the 09, 15, 16, etc. And the content of the schedule is not changing. It's just the way that we collect it. And so I won't go into too much detail since it probably only applies to a very small number of attendees today. But for those that it does apply, I am working on a quick 30-minute training that I'm going to distribute to counties that this applies to. So just keep an eye out for that. It should be coming in just the next couple weeks. And then these are just some reminders about the resources and training available for the annual report process. So just to let you know that the 2023 live annual report training webinars will be offered in March and April. Those are those 2-hour live webinar trainings that walk through the entire annual report filing process. And then we are continuing the one-on-one appointment workshops, and those will be the last 2 weeks of April. And registration for these will be coming out in February. They're free of charge, and you just need to register. And one last thing on this topic is I want to remind you all about the online filing flag descriptions guide. This is located on our BARS reporting templates page. This is a great resource to have open while you're filing your report, because if you come across any red or yellow flags and you're just not sure what they mean or what to do with them, this guide has a more in-depth description of what those errors are, including tips and tricks on how to resolve them. And we've also linked to BARS sections that may be applicable and provides even more guidance. So everything at your fingertips in this guide. So definitely check it out if you haven't. And this is a screenshot of where you can find all of our training and workshops that we just talked about. And this is under the bars and annual filing tab on our home page, just titled trainings and workshops. So this is where we have our e-library. So that's where we have all of our recorded trainings, including leases and SPEEDA trainings. And then this is also where we advertise the registration for our in-person or live webinar trainings. Also included in our e-learning library is a 50-minute introduction to bars. And that's just a great training to watch if you're new to bars or new to governmental accounting. That can help you navigate through the bars manual. And then we also have a link to WFOA's non-conference training, and that includes our 7-hour overview of bars training. And that training is designed for new users. It gives a whole overview of everything related to bars. And so it's a great training to take, especially if you're new to the position. Because like for today's training, this is just an update on the current bars manual. So this can be a little overwhelming for new users. So we always recommend checking out that WFOA site and keeping an eye out for when bars classes are happening. All right, and then I am really excited for this. So I am beyond excited to announce that we are in the process of building a brand new online filing system. It's going to have a new look, a new feel, and a much better user experience. I know there is a few pain points in the current filing system, so I'm really excited about this new system. We are working really hard to provide you a great filing system that's going to be intuitive, easy to use. It's going to be great. So I know change, a little daunting sometimes, but I assure you the people working on this project understand the filing process and some of those pain points. So we are very excited about it. I don't have a ton of details at the moment, but just stay tuned. We just wanted to at least put it out there that this is coming, but this is not going live next year. So when you're filing your 2022 report, you'll be using the same filing system that you have in the past. And that brings us to our third polling question. Launching that right now. The question is, did you know the most important page in bars right after the update is the alerts and changes page? All right, answers are coming in. Give that just a couple seconds. And if you didn't know, definitely check it out in December. We post the written bars update and everything gets updated in December, so you can access all of that. All right, and then let's just share the results real quick. So definitely majority said yes, of course, you visit it every December to check out those updates. But again, if you didn't know, that's all right. Now you do, and you can check that out in December when it gets published. All right, now we are moving on to updates and reminders related to bars code specifically. The first one that we're going to talk about is the transportation bars codes. So we have restricted these codes to governmental funds only. So that means that they are no longer allowed in enterprise or internal service funds. Now, there are a few exceptions. So there are 4 exceptions to that rule, and you can see those listed on your screen and also included in your handout. And those 4 exceptions are still allowable in enterprise and internal service funds. And just a little background on why this change is occurring is we conducted research to determine when or if it would be allowable to report transportation activities in a proprietary fund. And based on that research, we were able to determine that other than those 4 exceptions, transportation activity really is a governmental activity and should not be reported in proprietary funds. A good example of this would be, let's say the water fund needs the streets swept in order to access the roadway where the pipes are held. So they pay the street department to go out and sweep. Now, this is still considered an expense of the water fund, so it would still be reported as a water expenditure code. So that's just an example of what that means. And then we also went through the entire chart of accounts and added descriptions for codes that either didn't have a description or maybe had a somewhat vague or maybe nondescript definition. So hopefully that helps make that chart of accounts download even more useful to you and your position with the government. And for fire districts here today, we have gotten a lot of questions over the past year about how to report when providing IT services to other fire districts. And this is just general IT services and not related to dispatch centers or a specific public safety function. And so we were able to finalize the guidance for that. So when reporting revenue for providing IT services, you're going to use BARS code 34181, and the expenditures related to providing that service would be reported to 52210. And again, those codes are in your chart of accounts download and also in your handout. And then we also just want to put out a reminder to governments who collect special assessment revenue to ensure you're using the correct codes, because we've noticed that some governments report it as a charge for service and others have continued to report it in the special assessment code. So just a reminder that if you are collecting special assessments, to make sure that they are reported to 36850, even if it is the primary source of revenue for your government. And that applies mostly to government types like mosquito control, diking, drainage, irrigation, those types of governments. And so just a reminder on what code to use. And we do have a specific code if you're collecting special assessments for a specific capital project, and that code is 36810. And again, included in your handout and in the chart of accounts download, and they have updated definitions as well. And with that, I'm going to pass it off to Christy to continue with our BARS code updates.
Thank you, Kaylee. If you attended last year's BARS update, you heard us speak on code 51861, which is the expense side of our judgments and settlements. We stated then that this code was allowed in proprietary funds. We should have been more specific. It is allowed in internal service funds. So going forward, this code is allowable in all funds except our 400s, which are our enterprise funds, and our 600s, which are our fiduciary. This is also a general purpose code. Therefore, it is only available to our cities, towns, and counties. For cities, towns, and counties needing to code this to an enterprise fund are our special purpose districts that do not have access to this expense code. You would use the functional code for your government or the enterprise fund to pay a judgment or settlement. For example, if you have a water fund or your water district and you need to pay a judgment or settlement, you will use your functional water code for that payment. On the revenue side, 36940, also entitled Judgments and Settlements, so do watch that. This is available to all of our governments and in all funds except those fiduciary funds. On to our next item, which is really exciting. In December, you will have access to a new resource. This is going to list every BARS code we have in the complete chart of accounts, and it will tell you what fund types that code is allowed in. As I said, it's the complete chart of accounts, every single BARS code that the auditor's office has in active working. That means if you are an entity that has a narrow chart of accounts, so an entity specific chart of accounts, you are going to want to download your chart of accounts for your basis of accounting. And you are going to want to crosswalk to make sure that you are only using codes that are available to your government. To make this a little easier, we are putting this resource on the BARS export page, so it will be right by your chart of accounts. So if you go to the cash manual, the first tab's chart of accounts. First page under that tab is BARS account export. There's the big blue box for exporting your chart of accounts for your basis of accounting and your entity type. The new resource will be above that box. It might not be directly, it might be up at the top of the page. We haven't quite finalized its location, but it'll be on that page so you can download both at the same time and do your crosswalk. Moving on to our notes to the financial statements. The last couple of years, we have had a blanket requirement for all governments to have a COVID-19 note. We are removing that requirement for our governments with a calendar year end. If you are a June 30th government, you will still report that COVID note for one more year. This is effective for December of 2022. And what we are asking is that governments review the continued impact of COVID-19 on their governments for any significant impact, either positive or negative. Negative, we tend to be able to dissect and understand for these impacts for financial statements. Examples are a continued significant loss in revenue. So if you have not been able to run your event center, if you are a government who has an event center because of the COVID-19 restrictions, or you can't have as many people at your events, and that has significantly lowered your revenue, you may still be required to have a COVID-19 note. Positive side is where it gets a little iffy. This is if you have a new source of revenue, significant due to COVID-19, and that can be either to improve your current offering of services to your citizens or to allow new services to your citizens. So do look at both sides of that for the COVID-19 requirement. Telecommunications, it's called telecommunications. Pretty much it is broadband internet, either wholesale or retail. In the past, that has only been allowed to be provided by our public utility districts, and most of those tend to be gap basis governments. We have now, as a state, opened that ability to provide telecommunication services to our cities, towns, counties, and ports. So now we are including cash basis governments. If you provide these services you will need to disclose that this new note come December. It is going to ask you to split out your revenues and expenses and capital outlays for telecommunication services that you have provided. This is to show our state legislature that you are not taking advantage of your ability to levy property taxes or any other tax to subsidize and lower your telecommunication rates, since private companies such as Comcast or CenturyLink are not allowed to levy those taxes. Therefore, it puts you at an unfair advantage if you subsidize. So that is what that note is for. Only required if you are doing telecommunications. Debit cards and imprest accounts. We've gotten a lot of questions from governments wanting to use debit cards because they are convenient. Most of us carry them and don't carry cash. Debit cards for your general government transactions are not allowed. We have a state law that requires your governing body to approve all expenses before they are transacted. Debit cards can remove that control, and it increases our fraud risk. So for general purpose of your government, debit cards are not allowed. But we have items like imprest and petty cash where your government has already said these funds are for general office supplies. In those cases, debit cards may be allowable. So we are updating our 3.8.8 imprest, petty cash, and other revolving funds section of the BARS manual to show that that may be allowable. We will also direct you to the internal controls section because you will want increased internal controls if you have the debit card. We are to our third code word, which is SAO. All right, moving on to future updates. This first one may seem weird to have in future updates because we've already implemented. And that is other post-employment benefits, also known as OPEB, and pension plans. The reason it is here is because we have heard and have had questions of governments entering into new agreements with their employees that could qualify as OPEB or pension plan items and would need to be reported as such. So even though we have implemented this accounting standard years ago at this point, it may still become to your government, may become significant to your government because you're entering into a new agreement. So we want to let governments know that you have to continue as you enter into agreements looking for these accounting standards. Next, we have subscription-based information technology arrangements and public-private and public-public partnerships and availability payment arrangements. They're all a mouthful. We tend to call them SPEEDA or PPP. That will be for 2023 reporting, and Olivia will cover that in the second hour in a little more detail. In the future, accounting changes and error corrections. This is going to be for fiscal year 2024, reported in 2025. We're just starting to do our research on this. It is going to update our accounting and reporting guidance. What it's going to do is split the prior period adjustment due to error and changes in accounting principle into, for cash, at least one new category. So we will have probably 3 categories under that prior period adjustment. So there will be some new BARS codes. We will be looking at that in the future, and we will have more information for you next year. In other one for 2024, reported in 2025, is compensated absences. We get a lot of questions on this. We will be updating our accounting and reporting guidance. In most likelihood, it will be removed from the Schedule 09 instructions and given its own section in the BARS manual with details of how to report your compensated absences based on your policy. So let's launch our fourth polling question, which is, are you responsible for filing the SAO annual report? All right, a few more seconds here. All right, let's take a look at those polling results. Most of you at least have a hand in the annual report, if not the actual filers. So moving on to our next update for 2023, reported in 2024, BARS code 31130, sales of taxable property, will be removed from our chart of accounts. This is because we have other codes that better explain this transaction. And so therefore we will be moving to those codes and removing this one. So those codes are, if you are selling property, code it to the appropriate 395. If you have collected property taxes on foreclosed property, then you would still code those property taxes to 31110, which is our property tax code. So moving on to our fourth code word, which is update. And with that, while you are all writing that down, I will turn it over to Olivia to discuss the schedule of liabilities.
All right, everyone. Before our first break, we just have a couple of reminders for the schedule of liabilities. Our first reminder for you is to please not report any negative amounts. This past year, with some of our pension plans having net pension assets instead of net pension liabilities, a lot of people thought that you should report those net pension assets on the schedule of liabilities, but that's not true. If you have plans with net pension assets, that asset amount only gets reported in your notes to the financial statements. You only report the plans with the net pension liability on the schedule of liabilities. Our next reminder for you is to make sure you're selecting the correct category for your debt. We have a few different categories: the general obligation, the revenue and non-general obligation, and the assessment. Really, the general obligation debt is debt that you have pledged the full faith, credit, and taxing power of your government. If you have not pledged the taxing power of your government, then it automatically falls out of that category, and you should be using the revenue or non-general obligation debt codes. Our next reminder for you is about the landfill post-closure liability. We've noticed that when some people report this on the schedule of liabilities, they're using the environmental liability code. Now, I know that a landfill liability sounds like an environmental liability, but we do have a specific code for that landfill and post-closure liability. So my advice to you is just take a look at the Schedule 09 instructions, read through the list of your available options and just make sure you're selecting the most appropriate code for the liability that you're reporting. And if you need help with that, you can always submit a help desk and we will help you make sure you get that right code. This last item is for conduit debt. So conduit debt is debt that you have issued on behalf of someone else, and that someone else is going to be making payments on that debt. So normally you do not report conduit debt on your schedule of liabilities. But if there becomes a time when you think it is more likely than not, so there's a 50% or higher chance that you're going to make payments on that debt, that's when you would report a liability on the schedule of liabilities. So you would total up the amount of debt payments you think you're going to make on that other debt. And when you report that on your schedule of liabilities, you would use the miscellaneous liability code. So the second part of the training is focused on leases and SPEEDA, which is subscription-based IT arrangements, which is basically just software leases. So here's what we're going to cover today. We're going to review some of the basic lease concepts. Most of this will probably be a refresher for several of you if you've already taken a leases training before. We're going to talk about the BARS codes for the Schedule 01 and your Schedule 09, which is the schedule of liabilities. We'll take a look at how your financial statements and notes to the financial statements will change. And finally, we'll cover that SPEEDA, which is that subscription-based IT arrangements, also basically just software leases. So let's start out with those basic lease concepts. And we'll start with the timing. We've been talking about leases for years because our implementation was delayed. However, the time is finally here. For our calendar year end governments, leases are effective for you started on January 1st, 2022. Hopefully, you're already accounting for leases under the new rules, which for you basically just means you're using different BARS codes to record your lease payments. If you're not, it's not the end of the world, but it might just be a little bit trickier for you to make sure that you go back through all of your 2022 activity and properly identify those lease payments and get them coded to that correct BARS code. Now, before we jump in too much further, we have another polling question. Okay, have you visited our SAO Leases project page? Responses are coming in. We'll give everyone a couple more seconds here. And we'll share those results with you. So more than half of you haven't visited it yet. I highly recommend you go check out that page. It's going to cover basically everything you need to know about leases. So if you don't remember things that we talked about today in the training and you want to refer back to it, that leases project page is likely going to have the answer for you. So as a refresher, our lease definition is a contract that conveys control of the right to use another entity's non-financial asset as specified in the contract for a period of time in an exchange or exchange-like transaction. I want to cover or highlight a couple of the important items in this definition. First is that this definition specifies that we're talking about leases between two different entities. And that means that leases within your government are not going to change. For example, if you have an internal service fund that leases out equipment to other funds within your government, you are not changing the BARS codes that you use for that activity. The other thing to keep in mind is that leases are for a period of time. And that just means that you don't have to worry about changing how you account for indefinite leases. So I know some governments have like indefinite easements and stuff, and your BARS codes for those are not changing. The last piece I want to point out is that a lease has to be an exchange or exchange-like transaction. In governments, we often see contracts that lease something for $1 a year or $10 a year, and those are what we call non-exchange transactions. And that just means you're not going to change the BARS codes you're using for those types of leases that are those really nominal dollar amounts. Now, hopefully at this point in the year, you've already identified all of your leases, but if you're still working on it, I want to remind you that some contracts do not use the word lease, but they still meet this definition. So they should be treated like a lease, even if that contract doesn't specifically call them a lease. And that brings us to our 5th CPE code word. This one is cookies. Remember to write these down to make sure you get credit at the end. The lease term is really important. If you don't figure out the correct lease term, that means that your lease calculation will be off. And your auditor is going to be looking at your lease term to make sure that that was calculated correctly. So what is our lease term? Well, that first bullet point is pretty easy. We're going to include any non-cancelable periods. But a lot of those lease contracts include clauses about either extending the lease or terminating the lease early. So what about those? Do we include them or not? When we're talking about extending the lease, if the lessee or the lessor has the option to extend the lease, and you're reasonably certain that they are going to extend the lease, then include that additional time in your lease term. Now, reasonably certain is not absolute certainty. It involves professional judgment. So you need to consider the facts and circumstances at your own government to make that determination. A couple examples of things that you can consider to help make that determination is this a really good deal? So there's an incentive to continue the lease. Has this lease historically been extended? Are there other options where that item can be leased from? Or is there really only the one option? So it's likely the lease will be exercised or the extension will be exercised because they just can't go anywhere else. There's a lot of other factors that might impact your decision, and that's totally okay. But it's probably going to be a decision that's unique to each government and to each lease. You might have some leases where you think it's reasonably certain that they'll be extended, and other leases that you think it's not reasonably certain that they'll be extended. Now for the termination clauses, I like to think of this as an example. So let's imagine we have a lease with a 3-year term, and our lessee has the option to cancel after the 2nd year. Now, if you're reasonably certain that termination option will not be exercised, then you do include that 3rd year in your lease term, which means your lease term is a total of 3 years. Now, if you think they will terminate the lease though, then you would only have a 2-year lease term. And you probably noticed the emphasis on those last 2 bullets. It's only included if either the lessee or the lessor has the option. But if both parties have the option to terminate, or if both the lessee and lessor have to agree to extend the lease, those are considered cancelable periods, and those never get included in our lease term. Those short-term leases are leases that at the beginning of the lease have a maximum possible term of 12 months or less. and that includes any options to extend. I have an example to illustrate this. So a lease has an initial non-cancelable term of 6 months with 5 options to extend the lease for 12 months at a time. The lessee is a startup company and it's unlikely those options will be exercised. So do you think this is a short-term lease or not? No, this one is not a short-term lease. When we talk about maximum possible term, we do not care about the probability of whether or not the options will be exercised. The options are always included in the maximum possible term. So that means our maximum possible term for this lease is 5.5 years. Now, when we go to calculate the lease term for our accounting purposes, that's when we care about the probability. And we've decided it is not reasonably certain that those options to extend the lease will be exercised. So we do not include those options in the lease term. So our lease term for accounting purposes is only 6 months. So this example just shows you that the determination of whether something is a short-term lease and the calculation of the lease term are 2 separate things. So you start out by determining, is this a short-term lease or not? And if the answer to that is no, it's not a short-term lease, that's when you move on to calculate the lease term. And it is possible to have a lease with a term of less than 12 months. This new lease standard changed how we think about leases altogether. We previously split them into capital leases and operating leases. But this new accounting did away with those 2 categories. Instead, we just think of everything as leases. But if you have a contract that transfers ownership of the asset at the end of the lease, we previously called those capital leases, but now we're calling them installment purchases. Really, the only thing that's changing there is the terminology. But we do have a lot of leases with options to purchase the asset at the end of the agreement, or those bargain purchase options. So what do we do with those? In that case, you need to determine at your government whether you think that option to purchase will be exercised. And if you think, yeah, we'll probably purchase this asset at the end of our lease, then treat the contract like an installment purchase. But if you determine, no, we're probably not going to purchase this asset at the end of the contract, then just treat the contract like a lease. And the difference between treating it like an installment purchase or a lease really is just the BARS codes that you use to record the payments, and we'll cover those in a little bit. So for the accounting, cash governments, you're really lucky. This is a lot easier for you than it is for our GAAP governments. So at the start of the lease, you don't record anything. No transactions have happened yet. There's nothing to record. Instead, as a cash basis government, you're just going to report the lease transactions as they happen. What that means for our lessors is that you're going to record a revenue when you get paid. And our lessees, you're going to record an expenditure when you make those lease payments or when you make those installment purchase payments. Our lessees will also be reporting a liability on the schedule of liabilities. Lessors, you have nothing to report on the schedule of liabilities because you don't owe anyone anything, you're just collecting revenue. So I have a question. Are we still recording the new debt of installment purchase on the schedule 01? So if it's a lease contract and you're going to own the asset at the end of the arrangement, then no, you don't record a debt issuance on your schedule 01. But you should really take a look at your contract, and if it is a true debt issuance, then you do record debt proceeds on your schedule 01. So an example of that is the local program through the state treasurer. That is considered a debt issuance. That is not a lease or an installment purchase contract. So the way you account for those local program, that doesn't change. Now that brings us to our next polling question. Now this one is a true or false. So short-term leases are 24 months or less. Just a couple more seconds. All right, so it looks like most of you got the answer correct. It is false. That is right. A short-term lease is one that is maximum possible term is 12 months or less. So setting a lease threshold has been a hot topic. We've gotten a lot of questions on it. So I want to start out by saying that SAO cannot tell you what your threshold should be, but instead what we can do is provide you with these helpful tricks and guidelines to hopefully help you select a threshold that's appropriate for your government. The first thing is do not arbitrarily select a threshold and don't just apply your existing threshold for capital assets. Instead, what we recommend is to create an inventory of all of your leases, even the small ones, and use that as a guide to make sure that the threshold you select is immaterial. That means that each lease that gets excluded is immaterial. And it also means if you added up all of the leases that you get excluded, the total amount of those leases is immaterial. This next step is really important, keeping track of all of the leases that get excluded. Your auditor will definitely ask you for this so that they can document in their own audit work papers that the leases that were excluded really are immaterial. Plus, this is just a really good step in internal control for yourself to make sure that the threshold you selected really is appropriate for your government. Another important step is to periodically review the threshold. And this goes for any threshold that you might set at your government, like a capital asset threshold or this lease threshold. You really should be reviewing those periodically to make sure that it makes sense for the size of your government and the amount of activity that you have. The next step, we really recommend adopting this in a written policy, similar to what you would do for your capital asset threshold. It really should be a written policy. So that covers all of the basic lease items. Now we're going to talk more specifically about the BARS codes. So what codes do you use when you report your Schedule 01 and Schedule 09? We'll start with the lessor side. So as a lessor, meaning you are leasing something out to someone else, your revenue receipts will be coded either to a 340 code or a 362. If you think back to your chart of accounts, that 340 code is a charges for services code. That's the code you use when leasing is a primary activity of a fund. Now that determination is made by fund. So if you have a fund whose primary operation is leasing assets to like other governments or other citizens, that's when you use the 340 code. You might have a different fund though, like probably your general fund, where leasing is not the primary purpose of that fund. So if leasing is not the primary activity of the fund, that's when you use the 362 code. For our lessors, these are the codes you use for a short-term lease and the regular lease. You don't change your revenue codes for those. Now for the lessees, So as a lessee, that means you're paying somebody else to use their asset. As you make lease payments, you'll use BARS code 591 with object code 70. If you're making installment purchase payments, so remember that's when you're going to own the asset at the end of the lease, you'll use BARS code 594, which is a capital expenditure code. Now you might be asking, why are installment purchases and leases using different codes? That's because an installment purchase, where you'll own the asset at the end of the transaction, what you've essentially done is purchased an asset. It's just over a period of time instead of all at once. So the nature of that transaction really is purchasing a capital asset, and that's why you're using the capital expenditure codes. But leases are a financing of the right to use an asset. And because it's considered a financing, that's why we're using the 591 code, which is a debt service code. Now for those short-term leases, which are leases with the maximum possible term of 12 months or less, you'll just continue to use your normal functional BARS codes. That basically just means for short-term leases, you do not use the 591 or the 594 codes. And that brings us to our 6th code word. This one is help desk. You also need to know the codes for your schedule of liabilities, the schedule 09. So what are the codes for that? You see here on the screen, they're split out into 2 categories. We have that general obligation debt codes and the revenue and non-general obligation debt codes. Now we talked about the difference between these a little bit earlier. Just as a reminder, that general obligation debt is debt that you've pledged the full faith, credit, and taxing power of your government. Now, it's probably pretty unlikely that you're going to pledge the taxing power of your government to make a copier payment. But there might be other leases out there, like a really big land or building lease, where you did pledge the taxing power of your government. We're not sure. There's just so many different governments with so many different lease contracts out there that might be that some governments have pledged the taxing power of their government for lease payments. So the general obligation debt codes are available for you if you pledge the taxing power of your government to make lease payments. But really, we expect most governments probably did not. So most of you will probably be using the revenue and non-general obligation debt codes. And you can see that category is also broken up into 2. We have the installment purchase code and the leases code. So you use that 26352 installment purchases for those contracts where you're going to own the asset at the end of the arrangement. That's the code that was previously used for capital leases. So really, if you were reporting something to that code previously, then you can keep reporting it to that code. Really, it's just the terminology that's changing there. This other code, the 26357 for leases, that's a brand new code because we did not previously report leases on our scheduled liabilities. So that's the code you use if you are not going to own the asset at the end of the arrangement. Now let's talk about the reporting, specifically how your notes, financial statements, and Schedule 09 are going to be impacted. For our cash governments, your financial statements aren't changing. It's the same C4 that you see every year. The most important thing for you is to make sure that when you upload your Schedule 01, that you have reported your lease revenue and lease payments in the correct BARS code. And then it'll automatically go to the correct spot on your C4. But I did just want to show you, this is where those items will show up on the C4. So for our lessors, when you report the lease revenue, you'll use that 340 if leasing is a primary activity of the fund. that shows up on the charges for goods and services line, which you can see there, that's under the Event Center Rental Fund. If leasing is not a primary activity of the fund, that's when you use the 362, and that shows up on the miscellaneous revenues line. For the lessees, you're just going to be reporting your payments. So if it's an installment purchase where you own the asset at the end of the arrangement, you're using that BARS code 594, and that shows up on your capital expenditure line. If it's a regular lease payment, you're using that 591 code, and that shows up on the debt service line. So the lessees, your note disclosures, this is required, but for our lessors, you do not have to report any notes to the financial statements. Now, if you think that lease activity is really important to the people that read your financial statements, you can include a note. It's just not required for the lessors. But for our lessees, you do need a note, and that should include a general description of your lease arrangements, your lease payments to maturity, and then if there are any commitments on the leases before the start of the lease term, you would include that too. Basically, just any major terms in your lease contract should be disclosed. So let's take a look at an example. So in this example, a city leases land and buildings from the state for $500 a month under lease arrangements that range from 10 to 20 years. Leases began back in January 2015, and they end in December 2035, and they include cancellation options after the first 10 years. So something I want to point out here is that this lessee grouped together several land and building leases into one description. It is okay to group your leases for disclosure. If you had 15 different land and building leases, that would take up a lot of space in your notes to the financial statements if you had a separate description for each one. So if it makes sense and it's logical to group them together, you can absolutely do that. Now, if you have leases that are really different from each other, so for example, let's say you have like long-term land leases and then like a 5-year car lease, those are really different. So it probably would not make sense to lump those two into a single description. So you just have to use your professional judgment to decide what makes the most sense. The other thing in this note disclosure I want to point out is the table of future lease payments. You would include that for each of the next 5 years, and then after that, you do it in the 5-year increments. This example is also available on our leases project page, so you can always refer back to it there. Now that brings us to our 7th polling question. That'll launch shortly. Okay, did you know that the draft version of the BARS leases guidance is on our project page? All right, just a couple more seconds here before we share the results. Okay, a lot of you learned something new today. On that project page, we do have a draft version of the leases page that's going to go into the BARS manual in December. We wanted to provide that to you early so that you had all of the guidance already, so you can go check that out. And we do have a link to that for you at the end of our PowerPoint. Now let's talk about the schedule of liabilities. You're going to have a beginning balance for any leases that existed as of the start of the year. For you, you're just going to calculate the total amount of lease payments that were outstanding as of the start of the year. Then you'll have additions for any leases that you entered into during the year. and reductions are just your lease payments made throughout the year. Then your ending balance should just be the remaining lease payments, and that amount should tie to the remaining lease payments that you reported in your notes to the financial statements. But let's take a look at an example and walk through how this actually gets reported on the schedule of liabilities. So we have two separate leases here. Our first one, the government leases a building for a monthly payment of $1,500. The lease is for 10 years and it started back in January of 2016. That's before this new lease standard was implemented. Now the government also has a copier lease with a monthly payment of $300 plus a 1-cent charge per copy made. This lease is for 2 years with the option to extend the lease for another 2 years. We determine it's reasonably certain that the lease will be extended. So that first payment is made in July of 2022. So let's look at the actual Schedule 09 and fill it out together. So I want to point out in this example, this is a government with a calendar year end. So their fiscal year runs from January 1st, 2022 to December 31st, 2022. We'll start out by talking about the building. For the ID number, we did not pledge the full faith, credit, and taxing power of our government, so that automatically puts it in the revenue and non-general obligation debt category. We also don't anticipate owning the building at the end of the arrangement, so that means the ID number we use is the 26357. For our description, we can just call it building. Doesn't have to be fancy. Next is our due date. Now this lease started back in 2016 and it's a 10-year lease, so the end date of the lease is December 31st, 2025. Now because this lease started back in 2016, it was already in effect as of the start of this government's fiscal year end, which was January 1st, 2022. That means we have a beginning balance to report. And for that beginning balance, we just want to figure out, as of January 1st, how many lease payments were left on the contract. And as of January 1st, there were 4 full years of payments left. So the beginning balance is just going to be that $1,500 monthly payment multiplied by 48 months, which is 4 years, to get $72,000. We don't have any additions to report because this lease was already in effect before the start of the year, but our reductions are just going to be our monthly payments that we made. We made 12 monthly payments, so 12 multiplied by the $1,500 payment is $18,000. Now our ending balance, we just take the beginning minus the reductions to get $54,000. Or another way to think of that is, as of December 31st, 2022, we have 3 years of payments left, and 3 years of monthly payments at $1,500 equals $54,000. We also have that bullet point there on the slide for you that explains the math. That way, if you want to refer back to this example, you know how we got to the amounts that we did. Now let's talk about the copiers. So again, we're assuming that we did not pledge the full faith, credit, and taxing power of the government, and we're not going to own the copiers at the end of the arrangement. That means we use the same code that we did for the buildings, that 26357. Now to figure out the due date for this, we need to know what our lease term is. The initial lease term was 2 years, and there was that 2-year option to extend the lease. And we decided it's reasonably certain we will exercise that option to extend. So in this case, maybe we always extend our copier lease. Maybe this is a really good deal, so we want to extend it. Or maybe this is the only place that we can get our copiers from, so we don't really have an option. So we're going to extend the lease. Whatever the reason is, we decided it's reasonably certain we'll extend the lease. That means our lease term is going to be 4 years, the original 2 years plus the 2-year extension. So that puts our due date at 6/30/2026. Now, because this lease started in 2022, we don't have a beginning balance. That's just 0. But we need to figure out the additions. And the additions are the amount that we're going to pay throughout the lease contract. Well, our monthly payment is $300 and our lease term is 4 years. So we're going to multiply that $300 by the 48 months for 4 years. And that gives us $14,400. Now, our reductions in this case is just our monthly payment of $300 multiplied by 6 months. Because our lease payment started in July, we only made 6 months of payments, and that's $1,800. Now, our ending balance is just that addition minus the reduction. So our ending balance is the $12,600. So one thing I want to point out is that to calculate that lease liability for the copier is we ignored that 1 cent charge per copy. That's because that 1 cent charge per copy is what we call a variable payment. It changes or varies with the amount of copier activity that we did. And we can't predict what that's going to be, so we do not include that variable payment in our lease liability here. So instead, what we're going to do with that, so let's imagine you receive the invoice for your copier, you have the $300 regular flat fee you pay, plus let's say $100 for that per copier fee. When you make that payment, that $300 flat fee is going to be charged to BARS code 591, right? That's your debt service code. But that per copier fee, that $100, you're going to use your normal functional BARS expenditure codes for that $100. So for example, if this was a copier that's used in the water department, that additional $100 per copy fee, that would be charged to BARS code 534, which is just your normal water functional expense code. So again, on the slide, we did include a bullet point to explain the math for our copier example. So if you want to refer back to it, you have all the information you need. That brings us to our 7th code word, which is FY 2022. And before we move on, I do have a question here. So this one, can you clarify again why you put the amount in additions rather than the beginning balance for the copier? Yes, the copier lease was entered into in 2022. So at the start of that lease was July 1st, 2022. So the beginning balance on your schedule liabilities, in this case, it's a calendar year-end government. So the beginning balance is the balance as of January 1st, 2022. But because the lease didn't start until July, there was $0 or nothing to report on January 1st. I have another question. What if next year we change our mind and we no longer think we would extend the copier lease? That is a really good question. So if you change your mind and decide, you know what, we're probably not going to extend the lease, then what you do in that case is that when you go to report your schedule of liabilities the next year, that 2 years of payments that you've decided we're no longer going to make those, you would report that as a reduction. And on our leases project page, we do have a recorded leases video, and it actually goes through that exact scenario. So it talks about, okay, we assumed that it was a 4-year copier lease. Now the next year we decided it's a 2-year copier lease. How do you report that? And that video also has an example of what if we decided we're going to exercise a purchase option and then change our mind. That's on our website. So I'd recommend reviewing that training as well because it goes into more details. All right, I have one more question before we move on to our subscription-based IT arrangements. This one is, we are a city and we're looking at entering into an agreement with the county where we can use each other's employees and equipment as needed for the projects. How would that be reported? It will be an ongoing agreement. What BARS code would we use? So using each other's employees, that's not a lease. A lease, the fundamental thing with a lease is that it's a right to use somebody else's asset. And the other thing that we need for a lease is a definite lease term. So if this is just an outstanding agreement where you can use each other's equipment as needed or employees as needed, and there's payment arrangements, that doesn't sound like a lease to me. That would just be reported how you would report your normal activity. So if you end up paying the county for their employees or their equipment, then you would use whatever BARS expenditure account that the activity is related to. So if you're paying them for employees in your water fund, that would be a 534 code. But if you're paying them for a different activity, you would just use the applicable BARS code. And if you're receiving revenue from them, that most likely would be like a charge for service type revenue. But if you get into that contract and you have specific questions about what BARS codes to use for pieces of it, please submit a help desk and we can help you work through that. Okay, another question came in, so I'll answer that real quick before we move on to SPEEDA. So if you're leasing a copier in 2022, then you decide to do the payoff to own it. How do you record that? So in that case, when you go to make the payment to pay it off and own it, you would use BARS code 594, which is a capital expenditure code because what you're doing is purchasing that copier. And then on your schedule of liabilities, you would reduce your liability to 0 because you've purchased it, you own it, you don't owe anyone else anything. Okay, now we're ready to move on to SPEEDA, which is subscription-based IT arrangements. I like to think of it as Leases 2.0. It's basically just software leases. So first, our implementation dates here. If you are a calendar year end government, so your fiscal year runs from January 1st to December 31st, SPEEDA accounting is applicable for you starting on January 1st, 2023. That is right around the corner. And similar to when you implemented lease accounting, we are strongly recommending our governments to start your SPEEDA accounting at the beginning of the year. Really what's changing for you is the BARS codes that you're going to use for these SPEEDA payments, but it's just easier if you start coding them correctly at the beginning of the year rather than having to change all your coding at the end of the year. Now, what is a SPEEDA? Here is our definition. A contract that conveys control of the right to use another party's IT software alone or in combination with tangible capital assets as specified in the contract for a period of time in an exchange or exchange-like transaction. You might be feeling a little bit of deja vu because this is basically the same definition that we read earlier for leases. The difference here is that we're now focusing on IT software. So let's take a closer look at some things that might be considered SPEEDAs. Now, the reason I say that these might be considered SPEEDA is because you really need to look at your individual contracts and evaluate those to determine if it meets the definition of a SPEEDA that we just talked about. But as you go through that, here's a few items that you should consider as you try to determine what SPEEDAs you might have. First, we recommend taking a look at your government's cloud computing arrangements. So software as a service, platform as a service, infrastructure as a service. Talk to your IT departments to figure out if you have any of these if you're unsure. Another thing to keep an eye out for is if you have any cloud-based enterprise resource planning or ERP systems. If you have any cloud-based accounting software, take a look at your online conferencing tools. That would be things like Microsoft Teams or Zoom or Skype. potentially even your email, calendar, and office tools like Microsoft Office 365. And then if you have any online payment tools, like you're accepting payments from customers. Again, you have to take a look at your specific contracts to determine if they meet the definition of a SPEEDA or not. But these are just a few ideas to get you going so you can figure out what you should start looking at. So now that we've covered a few things that might be included, let's talk about what is not included. Our first one here is short-term SPEEDAs. And thankfully, the definition of a short-term SPEEDA is the exact same as a short-term lease. As a reminder, it's short-term if the maximum possible term is 12 months or less, including any options to extend. What that means is if your government has a contract for like Zoom or Teams or Skype, but your contract is just month to month, that's a short-term SPEEDA, and you don't have to change how you're counting for those. But if your government signed a contract for like a 2 or 3 year period, that would be a SPEEDA. So if you have a situation where IT software is insignificant to the tangible IT asset, you would treat that like a lease. So as an example, what that would mean is if you have like a smart copier, the tangible capital asset there is the copier, but it does have this other IT component to it. But really that IT component is pretty minor, so you just treat that entire smart copier contract like a lease. Now, SPEEDAs also do not include perpetual licensing agreements. Remember, the definition of a SPEEDA says it has to be for a period of time. So a SPEEDA just allows the government to use that software for a limited amount of time, unlike purchase software, where the government can use it indefinitely. Something that I want you to be aware of is sometimes when you purchase a perpetual licensing arrangement, sometimes you make it in installment payments because that software can be really expensive. Sometimes the companies will call those installment purchases or those installment payments subscription payments. But if you're getting that perpetual license agreement, it is not a SPEEDA. Now, if your contract is for IT support services only, that's not a SPEEDA. An example of that would be paying a company to train your employees how to use a software, or paying for troubleshooting or help desk services, especially if you have that perpetual licensing agreement and then you pay a separate monthly or annual fee for technical support. That technical support is not a SPEEDA. I have a question here. So our annual payments to bias would not be a SPEEDA because it is perpetual. So in this case, you really need to take a look at your contract with bias. So if you really do have a perpetual license to it, meaning if you stopped making payments, you can still access it and use that software, then that's a perpetual license. But if you have to make those payments to access the software and continue using it, that way you can keep recording things, that would not be. So even if you're not planning on changing your software provider, that doesn't mean that it's automatically a perpetual license agreement. So look at your contract with bias, figure out, okay, is this for a period of more than 1 year that we're committed to? And if your contract says that we're going to use bias for 2 or 3 years, then that would be a SPEEDA. But if you really are just paying month to month, then that's not it would be considered a short-term SPEEDA and you don't change your accounting. We have another question. Is there a threshold for recording the SPEEDAs? Your government can set a threshold similar to the lease threshold that we talked about earlier. Again, I would really recommend take an inventory of everything, look at what you have, make sure that anything that's excluded is not material. You want to capture the majority of your SPEEDA activity with your threshold. But setting a threshold is a management decision, so that's something you would need to decide at your government if you're going to do that or not. Okay, that brings us to our last polling question. Are you ready to implement leases? As you answer that poll, I have another question. So for libraries that purchase ebook licenses that are metered by number of checkouts or only available to patrons for 1 to 2 years, is this a SPEEDA if there was only a one-time purchase price? And we also pay access for databases and other ebooks. So if there's only that one-time purchase price and you're not obligated to make any additional payments, then no, you have nothing to report on your schedule of liabilities because you don't owe anyone anything. Now, if you're paying for access to like a database and that's a subscription payment that you have to keep paying to have access to it, that could potentially be a SPEEDA. Your next step would be to look at the contract and figure out, okay, is this contract for longer than 1 year? If it's longer than a year, then yeah, that's a SPEEDA that you would report on your schedule of liabilities. But if it's like a month to month or a year to year contract, that's considered short term and you would not report that on your schedule of liabilities. Okay, so for our results here, most of you in the process, a few of you have already started, and some of you are not quite ready. So accounting and reporting, here's what you're going to do with those SPEEDAs. If it is a regular SPEEDA, you'll record a subscription liability on your schedule of liabilities, and you're using BARS code 591 to make those payments. Basically the same thing you're doing for leases, just now we're including software leases. If it's a short-term SPEEDA, that means there's no liability on your schedule of liabilities, and you use your normal BARS expenditure codes. I have one question here on the software reporting. This begins in 2023, which is reported in 2024. That is correct, yes. Now, how do you get started on this? You can visit our SAO SPEEDA project page. We have a link to that I'll show you in a second. Similar to when you implemented leases, take an inventory of all of your SPEEDA contracts. Include other departments in this to make sure you capture everything. Then evaluate each contract and document that evaluation. So even if you determine this is not a SPEEDA, or you decide this one is a short-term SPEEDA, keep the documentation of your evaluation. That is really good audit evidence to provide to your auditor to show them that you did your due diligence in implementing this new standard. Then finally, we recommend start testing and running the numbers. You don't have to wait till 2023 to calculate your SPEEDA liabilities. So what resources do we have for you? We have a SPEEDA and PPP project page. Now PPPs are public-public or public-private partnerships. We didn't talk about those today because they're not very common for our cash basis governments. But if you go to this project page, it has the definition. It talks about what is a SPEEDA, what is a PPP. And if you read through that and you think, oh, I might have a PPP, then submit a help desk, reach out to us, and we can work through that together. On the SPEEDA project page, we have a recorded SPEEDA video. Now this covers a lot of the information that we talked about today, but it's just recorded and out there for you so you can refer back to it anytime you want. Our next resource is the Leases project page that has basically everything you need to know about leases. And relatively new that we've added to that page is the draft BARS page that's going into the Cash BARS manual in December. So you can get a head start and take a look at that before it gets published. Now that brings us to our last code word. This one is training. And as you all answered that, or write that down, I have a question. Is there an exclusion for SPEEDA similar to leases? So the lease term excludes periods for which both the lessee and lessor have the option to terminate, or when both parties have to agree to extend. Yes, the great news about leases and SPEEDA is they are so similar. So the way you determine your SPEEDA term is the exact same way you determine your lease term. So same rules. Now we have a couple other SAO resources that we wanted to share with you. So if you copy the QR code on this next slide here, that will take you to a training page. We have a lot of trainings for you that you could even earn CPE. We have things about fraud cases that covers best practices and internal controls. You'll learn how to recognize warning signs and red flags of common fraud schemes. So this is just another resource that is available to you. So I do see one more question here. Do the software payments that are SPEEDA paid in debt services? So yes, as you make payments on your SPEEDA or those software leases, you're going to be using that 591 code, which is a debt service code. All right, and that ends our time. If you have additional questions, please feel free to submit a help desk or reach out to us and we'd be happy to help you. Thank you all for attending. I hope you have a great day.